Malieka Bordigioni. She is with the Food and Agriculture Policy Institute at the University of Nevada, Reno. And as you can see here, she's going to give us a little snapshot of the outlook here in Nevada for 2021. So without further ado, Malieka, it's all yours.
All right, thanks, Barry. Good introduction, that's pretty much it, and I will just get into it. So yeah, as Barry said, I'm going to talk to you a little bit about what FAPRI is, talk to you about the international crops model that we do here at UNR, give you an overview of the Nevada outlook from June, and then just a couple local prices from today, and tell you what else we do. So FAPRI is the Food and Agricultural Policy Research Institute. It's headed out of the University of Missouri. We have a bunch of partner institutions, including University of Arkansas, Texas A&M, and others. The Institute was founded in 1983, and it's a wonky, the wonky part of it is that it's a type of model that estimates prices and quantities for a basket of goods, livestock products and agricultural crop products, as well as farm policy. And it's presented to Congress every year. It's funded under the Farm Bill, and Congress uses this to make their decisions, so don't hold that against us for those of you who aren't fans of the Congress. And we use it to present to Congress, but then we also use it to look at external factors such as trade agreements. When FAPRI hit, we used the model to make estimates about, what we expected to happen given the underlying assumptions. Our most recent update was in November 2020, and the most recent update to the Nevada model was in June. So I'm going to tell you a little bit about what goes into the model and show you a couple of examples of what comes out. So we use macroeconomic data. So we look at things like GDP growth or per capita GDP, population. We look at exchange rates between countries. And then in the international crops model and the Nevada model, or I'm sorry, we use, take in things such as oil prices, as they have a strong influence on agricultural returns. This is an example from our most recent baseline where we were looking at the percent change in GDP. You've probably heard a lot of folks talk about a V-shaped recovery. This is what it looks like to economists when we map it out. Again, this is from October 2020 data. We'll be getting some new data, and I suspect that the right-hand side of that V will not be as steep. I think it might start looking a little, in my opinion, a little bit more like a Nike swoosh and without the fast recovery, because we'll be seeing the effects from the most recent shutdowns over the holidays. We also, as I mentioned, look at things like oil prices. So here you're seeing where the black line is that's actual data, and then everything on the right-hand side of the black line is our projection. We don't say forecast because we're not making any assumptions about what will change. We're just assuming that if we held everything constant, all of the production factors constant, that's what it looked like going forward. The little tiny blue dot is where West Texas intermediate prices are this morning, so it's a little bit higher. It's around $51, I think, and we were estimating it to be around 43 or something in our projection. For those of you that follow, the idea, or most people now see that oil producers need about $60 a barrel to break even. There's a real glut on the market now, given the lack of travel under COVID. So we have more supply than the market can clear, and that's what's putting downward pressure. There's other things that have been going on. I know some of you probably saw the price go negative. I think it was in May, and that had to do more with OPEC and COVID. But at any rate, this is our projection going forward. In terms of our international crops model, I'm just going to show you a couple slides of what the type of information that we get out of it. We model 16 commodities. So again, we're doing just the international crops portion. Somebody else does the international livestock portion. There's a biofuels portion, the US version. And really the ultimate goal, as I said, because we're presenting this to Congress, is to get estimates for US prices. And of course, because we have so much international trade, we couldn't really accurately estimate projections for US prices and quantities for agricultural commodities without also modeling what the rest of the world is doing. So we have, soybeans, corn, wheat, and so forth, oil seeds, no hay in the international model, but we do have that in the Nevada model. And then we model actually 37 countries plus one called the rest of the world, which is all of the countries that aren't explicitly represented. And then again, estimating price and quantities, but we look at factors such as production area, yield, feed use, food use, all those macroeconomic factors I showed you before, ending stocks and so forth. So we do look at this in terms of global net trade as opposed to bilateral trade. So we're not modeling the trade between every single country. We're just looking at as a global whole. But what we can see is trends. So this is an example. This is representing net exports by exporting countries for a basket of the most widely traded commodities. You can see corn in red, and then down below, soy meal is in sort of a purplish color. And the slope on that in the projection period is much steeper than the other commodities. And this is because the demand for livestock globally has been increasing. And as the demand for livestock increases, so does the demand for livestock feed. So we're really seeing an increase. Aquaculture is influencing this as well globally, even though we don't explicitly model aquaculture. But this is just an example of the type of information we get out. And even though we don't do bilateral trade, we can examine single countries. If for any of the countries that we explicitly model, we can look at trends within that country. So this is looking at China's net trade. Again, corn is in red, and you can see that big spike. I mentioned that we use the model to look at different types of trade policies. So we had included the phase 1 China agreement in here, which has become less influential, perhaps, I'd say, since the onset of COVID. China seems to be importing what they need to hold steady with their livestock demands. Here, soybeans is modeled on the right. So they import many degrees more soybeans than any other. And that's really because they don't produce a lot of soybeans. But again, this is showing this has a lot to do with them rebuilding their livestock inventories after being hit by the Asian swine fever. We can also look at trends for specific countries. So while this isn't necessarily a bilateral trade issue, this is looking at the percent of the market share of exports for US and Brazil, who are the largest soybean exporters globally. And you can see this shows us that in the last 10 years, the relationship between the US and Brazil had flipped. Soybean farmers got hit very hard over the last couple of years with the trade war going on with China, but we do show them recovering. We also show that the soybeans, the total number of soybeans exported, which are the bars, is increasing. And again, this has a lot to do with the increasing demand for livestock globally. Talk to you a little bit about the Nevada annual outlook. As I mentioned, June 2020 was the most recent release of this data. We release it once a year. It's usually in April, so you should be able to look for it this March or April. We didn't release it this year till June because of COVID. In the Nevada model, we project price and quantity for cow-calf, sheep and wool, milk, alfalfa, wheat, and barley. We're limited. We used to have, for example, an onion and garlic model. We're really limited by the data that's available, and the onion and garlic model got dropped because the USDA no longer releases that at the Nevada state level. We include all the macroeconomic data that we include in the international crops model, and some of our partners that do the US modeling for livestock also help inform the Nevada model. The Nevada model also includes cost of production. Here's some highlights that went along with the June 2020. Some of this has changed. And this PowerPoint will be available to anyone who's interested if you want to read through this in more detail. But basically, like the international crops, like everything else, we had a huge contraction in the global economy due to COVID. The dollar was a little bit stronger. It had weakened slightly in June compared to what it was in maybe the 6 months, 12 months previous. The dollar is actually a little bit weaker, maybe down about another 8% or so since we released in June. So while there is long-term purchasing power, we don't have a weak dollar. It's just weaker than it had been over the last couple of years. We do have long-term purchasing power for importers, but really who's going to benefit in the short term is going to be exporters, because our goods are now a little more affordable on the global market with a weaker dollar. We talked about the petroleum prices crashing due to the oversupply when we looked at the West Texas Intermediate earlier. These low oil prices will also help with the cost of inputs to producing ag products, but as you know, many ag commodities are at a generally low price level now, creating challenges for all sectors, but in Nevada, this is especially true for cattle and dairy. Really modest cost inflation with that low or lower dollar value, and the yield increasing, we're holding down the cost inflation. Of course, grazing allotments are always an issue for the cow-calf industry. And here we're focusing on, and when Dr. McAfee gets back on, I'm sure she'll talk about this, the fire season and drought is really what has impacted Nevada a lot. And this, again, was back in June before we had all the big wildfires. And we're also have limited dairy expansion. The whole milk powder plant is short in need. So here we're looking at Nevada steer price.
Malieka?
Yes.
Malieka, this is Barry. We've had a question that if you could really explain the axes on your graphs.
Sure.
In a little more specifically, I think it would be really great.
Sure.
Okay.
Yeah, and I'd be happy to, at the end, to go back and look at anything.
Thank you.
Folks have questions about that wasn't. Okay, so here we're looking at Nevada's feeder steer price. So you have the price is on the left axis, the y-axis, and the year. So all of these graphs, and I should have explained this clearer before. So when we're running this model, both for the Nevada model and for the international crops model, we take all of our historic data and we can represent that through the current period. So that would, in a lot of cases, we have a data lag delay. So that would be like, say, 2019 here, right? But then we also project out another 10 years of what we think those price and quantities, or what those values will be over the next 10 years if we hold everything constant as it is now. So here you can see, most of you folks are familiar, we had these really nice returns in 2014. That was sort of the peak of the feeder steer price, but it's come down, it's modulated now. This graph in the dash is showing what our estimates were in June compared to the solid line, which is what they were the previous January. And these prices have downward pressure from the glut that was resulted from the COVID-19 impacts. The red dot on here, this isn't the Nevada price, but this is the US feeder steer price from yesterday, is down even lower than what we had projected in June. Here's a graph of just some cost indexes for broad categories of inputs to agriculture. On the left, you have the prices. These are in 2015 dollars. and they are representing or reflecting an average in the projection period, so 2020 to 2025 average. So this is what we're looking at over the upcoming 5 years. You can see that wages, again, we're comparing January and June, so prices are a little bit lower. That may have to do with some of those lower oil prices, some of the weakening dollar. Wages are really the largest portion of that. Although services are a little bit higher. This might be an outcome of COVID again, where folks might be a little cash strapped, so they're repairing instead of purchasing new. And then here we sort of put the costs and the profits together, so you can see the space between the bar and the black line is what we estimate those margins to be. So again, on the left is costs or dollars, and on the bottom is our modeling period. So this would be, I think through 2019, we would have actual numbers, and then out through 2025 is the projection period. The other operating costs, so the non-feed costs, are really what's increasing, maybe at about 6% per year, 6 to 8% per year. But we are seeing a little bit, we projected sort of an upward trend on the revenue, so the margins are slightly increasing. And the last livestock chart I have for you is just really looking at what herd size is. So this is the 1,000-headed cattle on the left-hand side. Same thing with the actual and projection periods on the bottom. You can see the beef and calf crop. And what I've heard recently, and again, because this is in June, I'm not sure that we had captured this yet. We expect, and I'm guessing Dr. Nyberg may talk about this as well, for inventories to be a little smaller than they were, given the backup from COVID. So these, you might see these levels actually drop down a bit when we release the data again in April. Moving on to alfalfa, our prices here, we are estimating, so we have prices on the left-hand axis, and then our modeling period again, so actuals through 2019, projected out to 2025. We're estimating alfalfa to be around 175. I think it was difficult for me to get Nevada prices, but I think they're getting a little bit closer to 200 now. I think we had a shortage that we weren't quite in a severe drought in June yet, as we are now. But moving on and looking at the hay cuttings, they're much lower than what we had projected originally. So here we're looking at hay acreage on the left-hand side, and then this is actually showing actuals through 2020. So this isn't projections. You can see the last 10 years is generally lower than the previous 10 or 15 years. And we have the hay intentions. So the green bar is the hay intentions that was released in March of last year, I believe. And you can see that in June, our cuttings were, our acreage was actually much lower than what our intentions were. I think we were hoping to get back to 2019. But again, we'll hear from the climatologist, the state climatologist, that the drought has gotten much more severe. And then the last, this is just Nevada alfalfa. You can see we're estimating that the alfalfa price per harvested acre is growing. This is an average for the state. So you might see higher prices, higher revenues, or higher or lower cost in specific areas. But our costs are increasing over time too, shrinking those margins. So the summary was just basically that COVID-19 had and will continue to hit national and global markets. Of course, livestock and dairy producers lost a huge amount of markets in 2020. Cattle and dairy returns will suffer likely for the last couple of years and be held down. Costs will moderate, but margins will be tight for the next couple of years. And then just real quick to tie up, I think I've taken more time than I needed, that we also do through University Center for Economic Development with Tom Harris, we do a Nevada Outlook update on about a monthly basis. It's called Sage Outlook. This is the website where you can tune in. We talk about price updates for Nevada, talk about Nevada agriculture, but then there's a lot of other economic issues that are addressed, especially given COVID. We just look at price and production trends for Nevada agriculture. And then real quick, I pulled down the feeder cattle price by state ending last week. Nevada is a little bit lower than it was, but higher than a week ago. So we're at like 131.24 hundredweight. And we're just below the Western average, but sort of trending down. And then the last hay price I got from USDA, again, this is, I think, lower than what it's selling for right now. This was at around 185. We have prices on the left, and it's just looking at 2019 is in the dash lines, or sorry, 2020 is in the dash lines, 2019 is in the red lines, and we would expect to see these higher prices given the limited supplies. And that's all I have for you guys. Questions?
Thank you, Malieka. There's a couple of questions that they're transcribing right now.
Sure.
As soon as I get a hold of them, I'll ask them.
Okay.
Those of you who may be wondering about Dr. McAfee, she had a total internet crash. And so we're working offline to try and see what's going on, and we're going to get her back on later on in the program this morning is our plan, if we can get her actual internet back up and running. So I've got the question here. It says there was a mention of other operating costs increasing by 6 to 8% a year. What do those costs entail, or what is included in what is the definition of other operating
Other
costs?
operating costs. Okay, that's why I left my PowerPoint up too. So I think this is the chart that they were referring to. And so this breaks out feed explicitly. So purchased feed is in the kind of blue stripy line. So this would be, you know, somebody's purchasing alfalfa bales or so forth. And minerals would probably be in that, whatever. And then the other feed costs might be grazing or maintaining a range. The other operating costs would be on this slide, you'd have like wages, services and repair, machine costs, chemical costs, that sort of thing. So that's when we look and see that these other operating costs are increasing, we can look back to our cost categories that we're modeling and see that wages are the largest part of that, followed by services and repair.
Great. I'm not seeing any other questions, and I just want to reiterate that if you have questions for any of our speakers, even if we move on to another speaker, if you have a question for a previous speaker, go ahead and get it on that in the system there on the queue using the QA function, and we will we'll get these up, and we'll ask these if we have to wait until the end to get them all asked. We will do that. So. Please use that Q&A function if you're sort of a first-time Zoomer and you're a little bit afraid you're not going to break anything. So just click on it; it'll pop up, write your question, and we will we'll take it from there. So please please do that.